All right. Well, good afternoon, everybody. Thank you for joining us today. And my name is Jack Sun on behalf of the CFA Society of San Francisco. It is my pleasure to welcome you to our event, the Active Ownership, Engaging with Companies and Driving Economic Transformations, where you will have the opportunity to learn from Yusuf George, Managing Director at Engine Number One, who is an expert in proxy voting and active ownership practices. He will talk to us about how to engage companies to improve their businesses and unlock financial values for investors, as well as how to identify and pursue value creation opportunities in the once-in-a-generation economic sector transition. Before we start, just like we always do, a quick note, everyone's muted for the event, so we encourage you to type your questions, if any, in the Q&A box below. We'll also monitor the questions closely and try to answer as many as we can, given the time that we have. And lastly, this event, just like we always do, will be recorded and shared afterwards. And it will be posted on our YouTube channels. We certainly encourage you all to like and subscribe and leave a comment there. Now, I'd like to introduce Yusuf, who leads Engine Number One's active ownership and proxy voting strategies for the firm's fund portfolio companies. Prior to joining Engine Number One, Yusuf worked at Just Capital, where he developed and led the firm's corporate engagement strategy, oversaw the racial equity portfolio, and assisted with investor-related engagements. He began his career in the global capital markets division at Barclays Capital and earned his Bachelor of Science in Computer Science from Trinity College. Welcome, Yusuf.
Jack, it is a pleasure to be here with you today. I'm very excited to have this conversation.
Well, thank you for joining us, and thanks to everybody who signed in. I know we all have a lot going on, certainly a busy day, and I think one of the things that's been intriguing for us is to learn more about what you do, Yusuf, Engine Number One, your background, and we'll get into that a little bit, but maybe just to kick off right off the bat, Engine Number One, tell us more about the firm, the ideology, the investment philosophy, and what made you join the firm? I know it's been almost 2 years.
Yep, that's right. So Engine Number One is an investment firm. First and foremost, we are focused on finding and investing in sort of transformational secular themes. For us, we were founded by Chris James, who is a longtime hedge fund investor who also invested in private markets. And we use that ability, that sort of hedge fund framework and approach to identify either trends or themes that we think will define the capital markets, not just in the near term, 3 to 5 years, but really in the long term. One of our core tenets is the idea of active ownership, and we'll talk a little bit about what that means to us as a firm. But we believe we are active owners that engage with companies to drive forward changes that we believe are additive to shareholder value. And there's sort of 2 tenets that this investment firm was founded on. The first is that environmental and social issues are material. They are economic, right? I think that there is a wide-ranging debate on the usability of environmental and social factors, and they're often talked about as sort of ideological. But in many cases, they are incredibly important factors that companies use to consider the management of risks. As investors, we can seek out opportunities, but environmental and social issues and the data underlying are incredibly useful as it relates to their ability to drive long-term value creation. So that's one piece of it, that environmental social issues are material. The second key theme that this firm was founded on is that there are once-in-a-generation transformational shifts that are happening. If you think about what's happening in the energy sector, the transformation from fossil fuels to other decarbonization type strategies. If you think about what's happening in the food and the agricultural space, if you think about what's happening in the autos space, the move from internal combustion engines to battery electric vehicles, there are these massive generational shifts that are opportunities. And we believe that there's an incredible unlock, and we'll talk about sort of the tailwind effect of government regulation and other factors that we take into account to really invest in companies that are going to lead through these transformations. So that was a lot there, but the takeaway is we're an investment firm focused on really unlocking opportunity through these once in a generation transformations.
Yusuf, I think that's helpful for our audience, and maybe take another step back. Tell us about why did you join Engine Number One?
Yeah, so you talked a little bit about my background. So I started my career in the capital markets. I was on the fixed income desk, and fixed income, which has now sort of risen back to prominence given where rates are in this day and age, was a really interesting foundational principle for me to understand what the capital markets are, how they operate, and how to engage with companies around what does it mean to invest in debt and invest in sort of stakeholder, use capital fundraising to invest in projects. So spent about nearly a decade in that space. And then I moved to a hedge fund in between, but I ended up at Just Capital. And Just Capital, if you folks don't know, it's a nonprofit organization started by Paul Tudor Jones, who's a hedge fund investor, Arianna Huffington, Deepak Chopra, a number of sort of civil and social leaders who had this idea of better understanding what the value set of Americans are and how you use those values to understand what companies are doing. So said a different way, we polled the public to understand their value set, and then we used publicly available data to understand how companies are treating their stakeholders. And that was quite interesting for me, because what it presented was this landscape of ESG, nearly 10 years ago, when ESG wasn't really being talked about, especially not in the capital markets to this scale. And what was really interesting about that role was understanding the data that drives decision-making of these companies on environmental issues, such as greenhouse gas emissions, on social issues, such as living wage or benefits, things that are critical to a company and to their valuing of their stakeholders. We use that data to engage companies. So I would spend a lot of time talking to management, to C-suite leaders, CEOs, head of chief sustainability officers, head of HR, IR teams, to really understand what is it that these companies were doing. We use that data to rank the companies and then created investable indices. And so when I learned about Engine Number One and the work that we're doing, I found it fascinating because for me, I have a long held belief that if you want to drive impact and change at scale, the capital markets is where you do that. But driving impact doesn't mean that you need to forego returns. And so what I learned about Engine Number One's approach, which was, taking into account, starting with a very fundamental approach, but taking into account environmental and social factors, externalities, and I'll talk a little bit about what externalities mean, but taking into account externalities into the long-term value creation and the long-term fundamental analysis of a company, I thought that was genius. So I joined the team to, primarily work alongside portfolio managers, work alongside our CIO to engage companies on these, what we believe are material factors.
Yusuf, I'm glad you brought up that last point, and we were talking about this prior to the presentation. Even in my prior days as a portfolio manager at BlackRock, I always thought that partnership between the PM team and the corporate actions, as well as the proxy-voting, the corporate governance team, was so crucial in driving a better conversation for the portfolio holdings on behalf of investors. Love for you to spend a minute, maybe an example. I know there has been numerous white papers that you put out on behalf of Engine Number One that talks about specific cases. Exxon comes to mind, and I think to your point earlier about decarbonization, electrifying America, some of those cases. Love for you to just zone in on some of the examples to share with our audience.
Yeah, maybe it's helpful to talk about our active ownership approach and what active ownership even means for us as a firm. So again, everything that we do starts with fundamental analysis. Our portfolio managers, our investment committee spends a lot of time trying to better understand where there can be an unlock in value for our end investors. And what we do, again, is we look at traditional fundamental analysis that you would do back in your days of BlackRock. But in addition to this, we add into our assessment the externalities that I talked about before, either the positive or negative impacts that we believe a company has. And we being my team, the active ownership team, works closely with the portfolio managers to assess if there's any, again, risks that we need to mitigate or conversations that we need to have with the company in a collaborative way to understand how companies are either investing in the stakeholders, investing in the energy transition, using their ability to say, not only have we made a plan to lead through the transition, but we will actually win. So active ownership, the way we think about it is there's sort of three core tenets that we use. One is voting, our ability to vote. I think this is perhaps it's a well-known fact, but in my travels through the investment space, most folks don't know that as a shareholder, you are a part owner of a company. And as a part owner of a company, you should use whatever tools that you have to be actively engaged in that company. One of those tools that you have is the tool of voting. So each year, there are tens of thousands of votes at large companies that happen during annual general meeting time. And during that time, shareholders have the ability to engage directly with companies, either through direct proxy voting, using your vote to either support or re-elect board members. You have the ability, shareholders have the ability to bring forth issues, like use their actual voice to bring up things that they can't directly talk to management about, either environmental or social issues, things like greenhouse gas emissions, things like setting targets around some of these things that they care about, that they value. But the point is that we at Engine Number One use our voting power, our ability to vote, to engage with management teams, to engage with companies, and to push for better transparency and accountability at some of the largest companies. For us, that's sort of the first tool. The second tool is engagement. And this is where the rubber hits the road for us. We think that there is an incredible unlock that can happen if we work actively with companies to understand how they are not just approaching transition strategies, but are they staying true to the commitments that they've made? So oftentimes what we'll do is we'll collaboratively engage with companies to best understand not only what they're doing, how they're approaching things, but truly being collaborative to understand if they're investing in, the way we talk about it is extending their terminal value, like making sure that they are on the right pathway for the long term. So we'll engage with companies quite directly, and that means working with the CEO, means sometimes working with board members, oftentimes working with the CFO and the IR team to best understand where the company is and how they're positioned over the long term. And then the third tool that we use in our active ownership approach is the idea of collaboration. Now, I think Exxon is probably the best example of this idea, right? When we think about collaboration, it's not only collaborating with other stakeholders. Sometimes it's collaborating with companies. Sometimes it's collaborating with shareholder advocacy groups. But this idea of collaboration is a really important one because in the capital markets, I'll talk a little bit about the Exxon campaign. But in the capital markets, what we are able to do, even as a small investor, is use the collective power of collaboration to help to drive large scale impact. So that's one of the things that's really important, because driving that impact actually really helps to unlock some long-term value.
Yusuf, I'd love to pick up that last point about even just Exxon in this case. Is how do you think about the accountability and measure factor when it comes to your line of work? I know every year you have almost 10,000 meetings and certainly go into details and different stakeholders at a company about what they're focusing on. Oftentimes, the alignment of interest may not be there between what we want versus what the stakeholder and management team want. How do you kind of, in a way, overcome those challenges at the same time in your conversation?
Well, as active owners, we have a range of tools that we can use, as we mentioned, and there are a range of tools that shareholders often use. You can do anything from, writing a letter to the management team and publicizing that, to using your proxy vote as we spoke about, or running a proxy campaign, which we did at Exxon. But let me just spend a little bit of time talking about why. Oh, the one other thing that I should mention is just collaborative engagement. And I think that is, at least for us in-house, is 90% of what we do, 95% of what we do. And the reason is, we bring a sound economic argument to any of the engagements that we do. And what that helps to do is that helps our the companies that we invest in, the companies that we engage with, truly understand how we're approaching and thinking about value creation for them and for our end investors. So in the case of Exxon, we recommended 4 board members and successfully got 3 onto the board. And the campaign itself was really focused on a few things. One was, Exxon had a long-held strategy to continue to invest in areas that were sort of low margin projects. That was not beneficial to shareholders over the last 10 years. Or if you look at sort of a 10-year look back period, there was effectively, low value or low shareholder return on some of the projects that they were invested in. One of the other things that we had a conversation with them about was around their sort of governance strategy, understanding that they are in a sort of transformation where fossil fuels will be used over time, but they have to understand that there will be other strategies that will be useful or relevant as they think about, their company over the course of the next 20 to 50 years. And do they have the right leadership in place to help to govern them on that? And so there was a third thing around sort of their low carbon solutions business. But really the takeaway there was we were able to get these 3 board members on the board because what we were able to do is with a relatively low shareholder ownership. We owned 2 basis points of Exxon at the time, but we were able to bring our sound economic argument to other shareholders. At the time, and I may have mentioned this, but there were no independent board directors that had sort of energy experience on the board. And we thought that was imperative for them to have and to recognize. And they had a long held history of not engaging directly with shareholders, even though there were many shareholders, especially those who believe in this idea of divestment, who tried to engage at one point and then just divested from the company. So there was quite a bit of shareholder activity prior to our campaign with Exxon. But for us, we were able to bring a really sound economic argument to other investors. And we had, a number of large public pension funds who were in support of our campaign, who came along with us. And that is how we were able to drive sort of impact at scale with a relatively low shareholder ownership. That tool of that proxy campaign, that tool of activism, is one that we don't use all the time, but it is one of the tools that we use when we want to, when we may need to escalate in a conversation with a company, because to your question, there's not a collaborative sort of engagement strategy happening, or the company doesn't believe in what we are trying to tell them, even if it's a sound economic argument.
Yusuf, I think that's really helpful for our audience to understand some of the outcomes, especially when it relates to a company like ExxonMobil, right? Love for you to tell us more about, as we talked about earlier, trends around decarbonization, perhaps this move towards electric vehicles. I know you have studies on those. Happy for you to spend a minute on each of those as well.
Yeah, so I'll talk about how we engage, or how we've been engaged with General Motors. So one of the big transformational shifts that we see and that I mentioned is the one from internal combustions to battery electric. And if you think about how cars or the auto space has shifted, there hasn't been really much significant change in the composition of a car for 50, 70, maybe even 100 years. And the move to battery electric vehicles is one that we have been focused on for the last number of years. We actually started engaging Mary Barr and her team nearly 2 years ago, over 2 years ago now, around this idea that not only should they accelerate battery production, they should accelerate EV production. We thought that they should de-risk their supply chain. We thought that they should be really transparent with the market around their production and how they're approaching it. Again, bringing a sound economic argument to the management team of this company to engage them on things that we believe will be a driver of long-term value. Now, what's embedded in there is this conversation around decarbonization, right? Because if you look at the numbers, over time, as they move from internal combustion to battery electric vehicles, there's a massive sort of downtrend in their sort of emissions, or their emissions profile. So while we're having a conversation with them about something environmental, this is not rooted in anything ideological. It's actually rooted in them unlocking value over the course of the long term. So we've engaged with them for a number of years, and we were really encouraged when we learned that not only did they announce expanding their battery plants, they announced new battery plants, that they increased their sort of their targets to create new cars. And one of the big things that they've done more recently is they've signed joint ventures with lithium companies. Accessing critical minerals is incredibly important, especially as when you think about the auto space and the commitments that companies are making around sort of the production of battery electric vehicles. It's something that we see on commercials all the time. But if you actually add up all of the automakers' battery electric vehicle targets, I think the numbers, you get to something like 60 million cars or so, but there's enough lithium right now to only support 40 million of those cars. So there are going to be companies that actually win through this transition. There are going to be companies that don't. And we think that General Motors is one of the companies that actually is investing in infrastructure 2 to 3 years ago in a way that other companies weren't. So again, this idea of engagement, this idea of being an active owner and engaging our companies that we hold in our portfolios to work with them to unlock this value.
Yusuf, that's helpful. And I think the other thing, as we talked about earlier, especially over the last week and a half on the event that's happening around broader markets, risk management comes to mind. How do you think about improving conversations, as you put it earlier, collaborative engagement with that corporate social responsibility mindset, having risk management teams that kind of drive those conversations when it comes to balancing the risk and return on balance sheets? Anything that stands out to you from the last week and a half?
Well, given that I'm not a trader, or I don't sit in the seat of a PM, I can't talk about portfolio management and risk management of portfolios specifically. But what I can talk about is the way in which we engage companies to understand how they're managing through situations, right? As actively engaged participants who hold portfolio companies, I'd say we are in conversations and we actively engage with companies often, meaning we through some of our closest relationships, are able to pick up the phone and call a company leadership team relatively quickly to understand how they're managing through not only the near term shocks that a company may feel, but also over the long term. And this, I'll bring it back to our strategy around using our proxy vote as an example. So one of the things that's incredibly important to investors is transparency of data. It is a tool that companies can use, that investors should use, but companies can also use to understand any risk factors that they may face, especially on the environmental side, also, on the social side. And so what we often tend to do is we use our proxy vote to really work to hold companies accountable to strategies that they've set. We use it to push them to be more transparent. We actually engage with companies during the season and before the season, where we feel like they are either not listening to shareholder requests, or we believe that there's more that they can do, that they should do, because it's something that we factored into, again, how we assess the company and the externalities, the impacts that they face. So again, can't comment on risk mitigation strategies directly, but proxy voting is a tool, direct engagement is a tool, and then also understanding where companies are and how they're approaching things is important.
Yeah, and I think it all ties together, right? It's not just about alpha decision making from a PM perspective or someone who's an investor. It's this ecosystem where you're improving for more sustainable longevity in terms of outcome that benefits the entire, I think, the supply chain. The other aspect, as we talked about earlier, is how are you seeing differences when you have these engagements, whether it's on the proxy voting or active ownership side, when it comes to different industries and different perhaps geographies? I don't know if you have any experiences in terms of looking at US and maybe international companies. I think that would be helpful just to talk about.
Yeah, well, let me talk about it from our portfolio management strategy. So, one of the things that we do is we spend a lot of time looking at an ecosystem. So I've talked a lot about General Motors and this idea of the move to battery electric vehicles. We have an analyst who spent decades looking, or who spent decades covering the auto sector. We also have analysts who's focused on the sort of the metals mining sector. And as we looked at the ecosystem of this long-term thesis on the transition, we recognized that there was a bottleneck that was being created by access to critical minerals. And so I sort of glazed over it as I was talking about it. But we recognized that, not just 6 months ago, but over a year and a half ago, because we have specialists, we have experts who are in those different sectors. And we've also invested in lithium companies. So we take a sort of ecosystem approach to looking at where can we unlock value, not just within our sort of centrally held thesis, but along the value chain of that thesis. We think a lot about that. We take that systematic approach because it's sort of the style of the firm and how our founders sort of approached investing over the long term. So I don't know if I answered your question there, but when you mentioned ecosystem, that's one of the things that I did want to bring up, is that we sort of look at the totality of it, not just individual companies, but what the system is.
It does help, and I think the other segment is just about how companies and boards react domestically versus companies that are perhaps based in Europe, based in Asia. This mindset, and I think the Scandinavian countries have always done a better job at responding to CSR, advocating for better outcomes through sustainable investing. So just curious on your experience there.
Yeah, I would say that the EU is definitely ahead of the pack, especially in terms of thinking and reporting on many of these issues. There's a lot. There's a stronger regulatory body in Europe and the UK than in the US, and so companies have responded in that way. Now, that doesn't mean that the US isn't sort of seeing increasing regulations. I mean, the SEC and the proposed climate rules are just an example of where companies are starting to think a little bit more deeply about sort of their approach to sustainable issues. But what I would really tie it all back to is, what is the investment case for all of this, right? So if we think about the Inflation Reduction Act and the hundreds of billions of dollars that are going to be put into that will prop up the capital markets and private investments to this transition, as companies think about sort of their long-term strategies, as companies think about the needs of their stakeholders, as companies think about the investments that they're going to be making over the long term, we think that there's an incredible opportunity to seek out the companies that are going to be winners through these transformations. So while the regulatory element of it is really important and is useful, I think that there is also a lot of investment that is going to happen in these spaces, and that's where we play a role.
Yeah, that brings me as a follow-up to the next question, is really around, what do you think some of the biggest challenges for that change? What are some of the pain points, maybe bottlenecks that you think will take time, but hopefully we'll get there?
Well, the reality is the investments that companies are making through these transformations are ones that we're not going to see the impacts or the effects of immediately, right?
Right.
If I think about the recently announced CHIPS Act and the billions of dollars that is going to be brought to companies to support sort of the reindustrialization of America, to put, which will support bringing semiconductors being made and created in the US, and how that's going to help to reduce supply chain disruptions, right? There are opportunities like that that are unlocked that are supportive of things that we're going to do.
Yeah, and certainly the pandemic was a great example of how that disrupts everyone, every industry, right? One more thing to talk about, and I think we'll have it open up for Q&A. I know we're actually more than 30 minutes into our presentation, is around this advocacy for diversity, equity, inclusion. I know for you, myself, within our line of work, as well as our communities and the volunteering, we're focused on that as leaders. Tell us more about anything, examples, or where you've seen in the past, or even the current line of work that you want to share with our audience.
Yeah, so in my former role, I spent a lot of time assessing diversity, equity, inclusion data from large companies, and helped to build databases to better understand, to provide sort of transparency on what companies are doing. Now, the reality is, 2.5 years ago, prior to George Floyd's murder, there was very few companies transparently reporting on diversity data. There's been quite a bit of a change of that over the last 2 years, companies being more transparent about workforce-related issues, about how they're investing in diverse suppliers, really thinking about the business case unlock of how diversity of board, diversity of mindset, diversity of senior leadership helps to drive lasting outcomes. And there's many studies produced by white papers and academics around how diverse leadership and diverse management helps to drive long-term outperformance. And so, one of the things that we do at our firm at Engine Number One is, we continue to advocate for greater transparency on diversity data, not only at the workforce level, but thinking about things like, turnover and reporting by race or ethnicity or gender, thinking about board leadership and board composition. So diversity is definitely something that is at the forefront of how we're approaching it. Again, thinking about sort of the long-term value that companies create by investing in a diverse workforce.
Got it. Well, I always ask my speaker this: What's the one thing you want our audience to take away from all of today?
Yeah, I'd say one of the big takeaways is that engagement is a valuable tool in helping to drive and to unlock value at companies. I think as shareholders, no one should be passive. You should actively use the tools that you have to really drive the change that you want to see. And our firm is doing that. Our firm is using our tools of active ownership to help to unlock value creation at these companies.
Well, there you have it. So what I'm going to do now, and thank you, Yusuf, for very insightful comments there. What I'm going to do now is turn over to the Q&A section of our presentation. And we just have some questions that came in prior to today. So thank you for submitting those questions. First question related to what you just said, Yusuf, which is an increasing number of index managers are giving investors the ability to choose their own personalized proxy voting policies. And I think it's timely because Larry Fink did put out his annual newsletter today on behalf of BlackRock that sort of went into some of the personalized voting policies they can have. So what is your opinion about this service?
Look, I think that we spend a lot of time on our approach to proxy voting. We have a custom voting policy. We work with ISS, who's our proxy voting advisor, to access research. We work with our investment committee to understand what's material in these votes. It's all to say that there's a lot of work that goes into how investors should be voting their proxies. Now, given everyone the ability to do that on their own, sure, I think that that's something that could be useful. It's not a choice that we've made currently because we have such rigorous policy and we are quite transparent about how we approach proxy voting. Our proxy voting guidelines are on our website. Within a week of when we vote, we actually showcase how we voted, which is something that that level of transparency you don't get from large asset managers oftentimes. So I think it's important to understand how votes are being casted on your behalf as an investor. And if you want to have the tools to vote on your own and understand in depth the issues that are being voted on, that shareholders are putting forth, absolutely, I think it's something that you should look into. But I think what's sort of the first pass is actually looking at what your what the proxy voting guidelines are of the companies where you hold your shares, and their voting record and their voting history. Now, I'm happy to share that, when I look at the environmental and social proposals that have come to fore in the 2022 season, thinking about our proxy voting record, we've supported something like 88% of environmental and social issues. And the reason why that's not 100% is because there are some issues that are absolutely nuanced. There are some issues that are not supportive of driving long-term value, and giving everyone a vote. They have to spend a lot of time understanding what is going to actually create long-term shareholder value or not. So that's sort of my views on the ability to pass through voting through everyone.
Yusuf, that's a great point. How do you have those, what I would call difficult conversations, to manage them with that 12%? What are some of the tools or levers you can sort of embed in those conversations?
Well, oftentimes we'll speak directly with the shareholder proponents or the management company to better understand their approach. Now, there are times where shareholders are asking companies to set a net zero transition plan. That's really clear, right? If companies are actually managing over the long term, they should have a plan and they should report on that plan and they should be transparent on that plan. There are times though that investors are more prescriptive than that, actually specifically telling management how they should approach something or whom within the company should approach something. Now, during those times, our role as investors, as governed, as the owners of the company who vote on and elect the board members, what we're doing effectively is we're saying that the board should govern the decisions that are made by the management team. That doesn't mean that the investors should make the decisions, right? And so, there are times where, you have to really understand what's material and what the role of an investor is versus the role of the company management team or the board member. And though understanding those things will help to drive the conversation around some of the things that we would support versus not support, or what we would approach a company with or not approach a company with.
That makes sense. Another question that came in was, can you please talk about the advantages in active ownership versus the traditional divestment approach when it comes to ESG portfolios?
Yeah, I would say there's a couple things there. One is traditional ESG rankings and ratings sort of haven't delivered the performance that over time that companies are expecting. And when I say that, having come from a rankings agency, is oftentimes there's tools that just screen out companies, right? Like, these are bad actors, this doesn't make sense. But what we've seen in the last year, especially around the returns in the energy space, there are a lot of ESG focused portfolios that didn't actually benefit from having them within that portfolio. Now, everyone's strategy is going to be different, so I don't actually think it's you should either engage or divest. I actually think it's an and or maybe it's an and or. Each investment manager,
it's not mutually exclusive.
That's exactly right. Each investment manager is going to have their differing approach based upon what it is that their investors want. For us, we believe that we should engage because the impact that we can create if we engage directly with companies, we believe is outsized. We have to, the way we talk about it is, you can't just see the problem. You have to actually sort of drive through it. You have to work with the companies, because if you think about the places that I've talked about today, energy, transportation, agriculture, those transformations, those are where 75% of greenhouse gas emissions sit, right? And so if the companies within those sectors are not actually transitioning, then we effectively are not solving the problem sorry, I lost my train of thought, but we're not solving the problem that divestment is allowing for, or right, the rules of divestment. So we think that an active ownership approach is actually working to solve the problem and drive outcomes over the long term versus a divestment strategy.
Last question, and we talked about this in the prep call too. You have a Bachelor of Science and a computer science degree. As we think about getting more people, especially folks look like yourself, myself, to be more involved, young professionals in this line of work, what are some of the valuable skill sets and experiences you think people should be having to get into, whether it's what you do or things you've done in the past?
Well, it's funny, because when I started my career, I was, using the tools of computer science to create models on the fixed income desk, and didn't know that those skills were transferable, so to speak. So I think it's really important for folks to think about the skill set that they have. I think that there's a gap right now. There's been lots of layoffs in the tech sector, where there's been massive growth over the course of the last 10 years. And there's a lot of people who are incredibly skillful who should seek out other industries where there's a tech gap. We talked about sort of this idea and this concept of reindustrializing in North America. Well, there's a lot of companies who are putting a lot of investment dollars into things like semiconductors or new manufacturing or automation, and those types of things are going to absolutely need engineers. And so what I would say is, people who have sort of diverse backgrounds and have diverse skill sets should absolutely be seeking out jobs across different sectors, because including in finance, because while you may assume that your technological background wouldn't be useful, I'm an example of it being quite useful over my career.
Yeah, I think that's timely too, as leadership from our chapter today, they put out an email about the resources and the toolkits that's available, right, for our society members to think about through this very difficult time, I think, for a lot of people, especially where we sit in Silicon Valley, Northern California. But certainly appreciate you sharing and taking time out of your day. I know it's getting late out on the East Coast. And your thoughts and insights. Yusuf, if someone's interested in finding out more about what you do or Engine Number One, how did they get a hold of you?
LinkedIn is probably the best resource, or you can go to engineNumber1.com. We have tons of tools on the website that you can look at, from white papers to our, like I said, our proxy voting guidelines and our proxy voting history. You can look at engagements that we've done where we're really transparent about how we approach things and our sort of investor focused view.
And those case studies you talked about, you can find them on there too.
Yep.
Perfect. All right. Well, hey, for our members today, thanks again for dialing in or tuning in from wherever you are. Certainly appreciate everyone and your time. And one of the things we always ask is if you could please complete the post-event feedback surveys. Those are really helpful for us to think about programming, what folks are interested in, or make sure to address those too. And with that, look forward to you all joining us for future events with the CFA Society of San Francisco. Please take care and stay safe.
Thank you.
Thank you.